Hi guys, good afternoon and welcome to Money Control Midday Mood Check. I'm Karunya Rao and with me is Yatin Mota. And Yatin, once again we've reversed the gains that we started out the day with. Today is also the first expiry of this year. Talk to us about what's pulling the market lower.
So, first of all, the global setup is quiet and is weak. The kind of global cues we are absorbing is slightly negative. In fact, yesterday we were talking about Nifty just trying to maintain above that 18,000 level, and today we have broken that decisively. Right now we are trading at 17,950 and below that. Sensex is down close to 420 points, and we are looking at weakness across the broader markets as well. If you look at the advance decline ratio, which I can see on my screen, is almost 1:2. So one advance and we have two declines. So the broader markets is really taking the beating. In fact, 0.5% down for the small cap indices. And look at Nifty Bank, how it's got beaten down, almost 1% lower, underperforming. Obviously, all the heavyweight financials are down in trade today, especially the likes of Bajaj Finance.
Bajaj twins are in focus today, top laggards on Nifty.
Clearly, and the reason why Bajaj Finance and Bajaj Finserv are down over 5%, in fact, Bajaj Finance right now is down 7%, is the fact that they had reported a 27% AUM growth. The market was penciling in slightly higher growth at 30-32% because every bank or a financial institution has reported strong advance growth, and in an environment where you are growing sequentially, growing faster, Bajaj Finance has probably missed the estimates in such an environment where banks are doing well, NBFCs are doing well. So clearly I think the market has got disappointed. In fact, today morning we had CLSA, which has a sell rating on this one. Target is close to $5,000. So from here also CLSA is looking at a 20% downside. Valuations are expensive, and probably the kind of disappointment the numbers have given versus expectation. 27% is not a bad number for AUM growth, but the kind of disappointment in a robust credit growth environment means that the stock is battered down. In fact, Bajaj Finserv, as we speak, is down 5.5%. ICICI Bank, 1.5% down. Power Grid, Titan are the other losers. But on the gaining side, Karunya, we have HDFC Life, which continues to outperform. Third day in a row, the stock is up. 7% up for that stock in a span of 1 week. So good returns for that life insurance company. But FMCG as a pack is doing well. Britannia and ITC, both of these stocks are up around 1.5%.
In fact, FMCG index could be a case of buying at lower levels, but also the quarterly updates have started trickling in. So that is something that's perhaps giving confidence that things are not so bad, because yesterday Marico also gave out their Q3 update. Yes, they said that the revenue growth will be in low single digits, and even the operating profitability could be a bit under pressure, but they said that costs are stabilizing. Inflation in raw material prices is also looking somewhat okay. So maybe that is something that's giving confidence as well. FMCG names like Yatin flagged off, of course, some of them are top gainers on the index, but apart from that, there's a Godrej consumer products that's doing well. Marico has gained more than 2%. Both of these names actually. Britannia inching close to that 2% mark as well. Dabur, ITC. So good gains, or perhaps we can also say they're capping the downside in the market right now, and not just consumption names, but also the auto index has seen a bit of a U-turn today in a market which is seeing more or less a broad-based selling. You have Nifty Auto again providing a bit of a relief to the market sentiment. It's up almost 0.6% as we speak. You have the likes of Bajaj Auto again, which is one of the top gainers on the Nifty 50 today. Even though there are very, very few names which are in the green right now. Balkrishna Industries, another name. MRF. In fact, tire stocks are looking pretty good right now. Natural rubber prices have come up a fair bit. Crude oil prices have also corrected. So that's something that's also aiding confidence to tire sector companies, and that's something we're looking at right now. I mean, across the board, just 3-4 names which are in the red: Motherson, Bosch, TVS Motors, Maruti. But barring that, everything else on the auto index is looking fairly okay and comfortable.
And I think crude is a major reason, Karunya, because crude is at a multi-month low below that $80 per barrel mark. And if you look at the fuel prices, they have come down significantly, which obviously helps auto demand. Rubber prices and synthetic rubber prices, which are derivatives of crude oil, because crude is falling, probably the raw material costs for these tire companies keep falling, and most of these tire companies have taken price hikes over the last few months. So what happens is that in a falling raw material environment, probably these companies can expand some bit of margins, and metals have also come down. So that helps the entire auto industry as such to control costs and probably pass some benefits gradually back to the consumers.
Yeah, but having said which, the OEMs are not really doing much, at least today, barring Bajaj Auto, which is holding out quite strongly. But as they say, nothing is permanent. This is one lesson that we see in the markets, and we've seen that all of this week. What happens in the first half, the time we give a midday mood check, completely a different scenario by the time the markets end. So anything could happen even right now. So let's see how the second half pans out. But right now, definitely things are looking weak, and perhaps it's the. Do you think it's also the FOMC meeting minutes which are also playing up on the sentiment?
Yeah, FOMC is one portion. Obviously, we'll watch out for that. Earnings season is also kicking off. So people would really like to know what India Inc. is reporting in terms of earnings, especially the IT pack. How do they see the global scenario? Because domestic consumption, as you were saying, domestic names are moving in trade. They are stabilizing. But the export stories have slightly, seen some correction. So probably I think markets are also waiting for the earnings season to kickstart and probably take cues and, build positions once again, especially the institutional investors where we have seen low activity. DIFI, buying selling figures are not very big or not very small, but the volumes are dried up, and probably I think once the result season starts from the next week, we would have some market action going there. Obviously, the direction of the markets will be quite dependent on the earnings and the expectations from the union budget, which is almost now 20 days,
away,
2 weeks away or 20 days away.
Yeah, in fact, after the banking and financial names, it is the IT index which is dropped the most today, down about 0.8%, and a lot of brokerage reports have started trickling in about the projections for Q3 numbers, and most of them have flagged off a fair amount of caution. Even technical analysts that we were speaking to in the morning show, they were rather cautious about even blue chip heavy names right now in a market like this. So not only are the fundamentals looking like they could be under pressure, but even on the technical side, nobody is really optimistic about any of these, especially the large cap names. So probably
there are three things to watch out for in the IT pack. Number one is the constant currency growth, which the brokerages expect for the top tier companies would be on a median base 1 to 3%. Margins could expand by 20 to 50 basis points because employee costs are falling and billings have improved, pricing has improved, so there could be margin expansion on a sequential basis. So quarter on quarter something will improve, attrition will come down because there have been job cuts, there have been employees who now expect that the good days of IT salary hikes are behind us. So the employees have also mellowed down in terms of expectations, which probably helps IT companies to build that particular salary base. And the third and the most important thing that brokerages will be watching out for in the commentary this time is the demand scenario and how really is the discretionary spend moving in the global markets, because that will determine the future course of ordering and deal wins.
And they're also keeping their fingers crossed that there's no downward revision in the growth projections and the guidance that most of these companies give out after their numbers. So let's see how things pan out. Few more days and we'll know. TCS will be the first one as always to deliver its numbers and set the tone, hopefully, for the others to follow. With that, it's a wrap on today's midday mood check. Thank you for watching.